What the data is telling us, trends worth watching. Yeah, it's been an interesting, less impressive last couple of months than it has been the first part of the year, but we'll dive into that and show kind of how trends have changed and shifting. I don't necessarily think they're for the worse than the better, but we'll take a look at that in a little bit. We're also going to look at seasonality of July and how that's playing out. We're going to look at the current money flows as we always do. I was actually asked, why do we always look at the same charts? Because this is some of the most relevant things that I can possibly show you based on what we do. So I want to always repeat that. In the center every month. And then last, we'll look at the SpaceX inception. Was it worth it? Did you miss out? Did you dodge a bullet? We're going to look at that as well. Seasonality has been a little bit different this year. And for some reason, it follows this Trump year thing. I'm not sure why. Again, Ryan Dietrich posts these on Twitter to keep it updated. And yeah, you usually get a sell-off from March till April. And the rest of the year is just kind of positive. Why, I don't know. We're also in the, technically in the 18th year of a real estate cycle, which is usually a very bad year or starting of a very, very bad era. So we'll have to see how that's playing out. But at the moment, nothing really points to that at all. We're just kind of playing on this playbook as usual. Frequently August, September is a rough time of the year, but I don't know. Maybe it will be this month. Also, seasonality, we are on 7/9 today. We're on July 9th. And from here until the 20th, a lot of positivity on the almanac for the Stock Traders Almanac. So a lot of positive days and high probability days in the next week or so. So we're in a seasonally strong period. July is one of the better months of the year, but then we get into the August, September, and then that can change. Although with this seasonality, maybe it won't matter. Maybe we just go flat for a while. I don't know. Certainly, we've had a higher volatility than the average, but the trend is generally pretty accurate, which is it's fascinating to see. So maybe it continues, maybe it doesn't, but I'm certainly keeping an eye on it since this has been the most accurate thing to watch this year. The S&P, right? We had a great, very obvious sell-off in March and April, so it made a lot of sense. We had a great recovery in April, May, and then since then, nothing. A whole lot of nothing. A lot of chop, a lot of sideways. But if we're looking at this PPO, which is the percent price oscillator, something that we keep in mind when we're looking at trend, it's still above zero, right? It's all pretty positive there, right? This was all pretty positive until it broke. And then, yeah, that was an ugly time, corresponded. And then it went positive and it was great. But so we're sideways. It's not real exciting, very choppy, but the trend is still there. I can make other cases why, we're maybe in a triangle. We can break out one way or the other. I think it's more likely because of the seasonality and because of the next week. It'll be more positive than negatives. Would be my guess, but maybe I'm wrong. But that's what we're shaping up to see right now. Money flows still well above the long-term moving average there, so I'm not too concerned about it. We're touching the shorter term. This is all just textbook fine. Of course, here's the choppiness we had earlier in the year, and then the rebound, and then it's just been steady since. It's not money flow has not been bad. It's been consistently positive, so I'm not too concerned about anything going on just yet. Of course, when this breaks below, then we'll start. That becomes a bigger picture. Something might be wrong in the market overall, but there's nothing to worry about at the moment. Another thing that's showing how it's quiet is our midterm cycle is just chopping sideways between our 200 and negative 200 lines. The big moves, you get outsized moves below, the big push lower there back in March, the big swing from the bottom to the top there, that was the trend. And since then, this kind of shows the market really is not trending anywhere. It's just kind of chopping sideways. Money flow is not really justifying strength or weakness. It's just kind of there. The bias is probably a little bit positive, certainly since about a month and a half ago. Not good or bad, but just good enough. Something to keep note. So really no signs of trouble here. No signs of trouble in the trend. Money's still coming into the market. Seasonality is pretty good. The only positive market index right now on these metrics, which are a little bit faster, is the Dow. And typically the Dow is one of the stronger market indexes. In July, I was looking at last night, and that's fascinating because it's really been tech and S&P, maybe small cap a little bit. Small cap kind of comes and goes with strength, and then international has just been very underwhelming. We had a good push about a year ago, and it really hasn't kept up since. So Dow is strong, everything else is kind of weak, especially mid cap. We get Japan, Nasdaq is showing a current trend down. I don't know how accurate that is, and we're also many days below, so that's more likely to turn and move back to the other side in the near future. That's what I would guess. Looking at the sectors, kind of a similar story. These are all defensive names, which is generally not the best thing you want to see. Excel Financials is okay. The tech is down, although it's been choppy. But what I'm most likely or expecting to see is these to start move to the left, and then we start to see a market rebound. You can see that more in the R or G chart. XLC, XLE, we're getting a lot of these pushing up and to the right. XLK, if that can make a little U-turn here and push, and I think it might have today. We'll see what that's doing. But yeah, if these are all pushing up and to the right, that's momentum in the market that's going to push upward in the S&P. So these are all the pieces of the S&P. When they all agree and are moving in the same direction, that's usually pretty positive. The ones disagreeing are really not as big, so I'm not as concerned. I mean, XLI, industrials is a little bit ugly. Financials are just kind of confused, but they're in a good spot. Over here to the right, so we've got, strength, relative strength to T-bells, and then we're leading in momentum. So it's all pretty positive. With these guys all joining the party, it could be a very good next 10 days, as I was expecting. New lows, we stayed above 100. We tested it a little bit. Of course, when the market has been choppy, kind of, no, it's this agrees with that, but we never saw that below 100. Really not that far on the new lows on the NYSE. There's a lot of stocks on there, a lot of issues. And usually, as I always say, when it comes down to 200, then it's a little more concerning. And this was corresponded with the pullback we had in March, April or March. I think it was April. That made sense. But going back to the taper tantrum, this went down to 1,000. So this is not really a scary number. This is like, okay, start paying attention, but it recovered quickly. We just have not been in a place where the market is scared, where there's enough stocks selling off to justify a bear market. We're just not there in the current situation. And then finally, let's look at SpaceX. A lot of people were like, hey, fear of missing out, or maybe they want to avoid it altogether. In either case, it is now in the Nasdaq as of this week. So you own a little bit of it. It's a very, very small sliver from what I've seen. But of course, there was a huge jump on the first 3 days. And then since then, it gave it back. And really, we are really close to where it started. If you go referencing the chart I showed maybe a month or two ago, IPOs typically don't go up in the first year from their inception. In fact, they could actually come down to about half of where they were. So starting at 150, that means around 75 is where it's very likely to go to before it would continue upward. Do valuations make sense on it? No, of course not. But that's not necessarily reality in the stock market. So that's where we are. So stock market, SpaceX, it's now in the indexes. It's the Nasdaq anyway, and it's really not going anywhere. So you haven't missed out. There may still be time to buy it if you're interested in it. I'm still not thinking it's that great of a stock to buy just yet. But something we're going to keep an eye on.